Which is the correct term do we use when filing the VAT?
Uh, what about goods returned or something?
So when you said that you give a customer the VAT, you give a discount the customers, which that discount will affect the output, say, output sales. So you normally raise a credit, no?
What do you say?
A credit note. So the credit note is the one which will help us to cancel that VAT. The credit note is the one which will enable us to cancel that VAT. And then number 3, we have been given the cash purchases, the standard and the exempt. Also number 4, exempt sales were all from the patch of exempt sales purchases. Okay, so you put exempt sales, and also we have the exempt purchases with the same remaining in the inventory at the end of the month. So they have not been sold because you have been told the exempt sales were all from the patch of exempt purchases with the same remaining in inventory at the end of the month. During the month, Manashesha paid rent for the business for the month of March, which is a rent is charged at 800 per annum. So the question there, number 5, is silent. We have not been told that whether that 80% was inclusive of the VAT or it was exclusive of VAT, or we need to charge the VAT. So in that case, examiner is silent. So you can decide to, because in tax, you go with the assumption. So if you take assumption that because examiner is silent, you say that that is inclusive the VAT, then you'll have to determine the VAT, but examiner is silent, you can decide to ignore that. Number 6, the business reported the actual credit losses of that one and another expected credit loss of 50,000. Expected credit, we have not incurred that one because VAT, we are talking of the actual. So we will not be much of interested of the expected, but with the actual. That's number 7. A supplier whom the business had made a purchases of that one and a customer to whom the good was sold at the standard rate in January still owed. We were doing this one for the month of March. And then at the end of the every month, when a share shop, which we were talking on number 7, a supplier whom the businesses had made a purchases of that one. Remember, and then a customer to whom good was sold at the standard rate in January still owed this one were declared bankrupt. So when you declare bankrupt, that is bad debt. And remember, that amount of 325, they add a VAT element. So we have to also raise a credit note so that we cancel that VAT element. But it was already filed. It was already filed in the month of January. So this one will not affect us unless now you amend. Yes, you have to raise the credit note so that your sales in the VAT ledger should be the same with the what you have. Because if you leave that one, but you have overstated your sales and yet you have declared another bankrupt. So you have to raise a credit note on that month. Number 8, at the end of every month, Mwanaisha prepays the electricity following the month using the prepaid meter token on a standard usage. She paid that one for the month of April, but she had paid the, so that one we don't even have an issue because we are not being told whether it is affecting the VAT. So it is not, that one is another expenditure. Other expense paid during the year, telephone, we are not know whether telephone it has a VAT element. audit fee including the VAT. So that is our interest. And then number 11, Mwana Siasha made a donation registered to charity consisting in cash and this one in form of good. Closing inventory, value that one. Now we have been told not all the transaction quoted as standard rate unless all the transaction quoted at 16% rate unless otherwise stated. Unless otherwise stated. So that is 20 marks. The VAT payable or refundable for the month of March 2010. So maybe I can copy this so that I will not come back. Back and back. Okay, so we'll have a VAT table here. Can use the T account. You can choose the T account, which is so for T account, we have a VAT here, VAT account, VAT account, and then we'll throw another T account here or another line here. So whatever it is here, we have the output VAT, and then the year input VAT. So all the purchases we will post here and all the sales, we post the sales here. So we can start with the standard sales. Standard sales. How much was our standard sales? If you go back to the question, the standard sale, the sales, we have the standard rate of 19. So you will open the 19, which 19, and then you'll have the 16%. Multiply by 16%. So you can integrate here maybe 16% here, which you have now. For this 16%, you can put it here. So that you can say this time is 16%. So you get the VAT element of that. And then exempt, we don't need to include the exempt here because it is not part of a zero rated. Zero rated, you have to show it. That one zero rated, which is show it here zero rated. That is the value of zero rated is this one. The value of zero rated, which if you multiply by 0, you will get 0. That we have exempt. Exempt, which exempt also the value of tax is this one. So exempt also will be 0. Exempt will be 0. So this is the VAT element, this is the tax element, this is the net amount. So you have the net amount and the tax value. So we go to the cash purchases. We have the standard sales, the standard rate, and the cash. So we have purchases here. We have standards also. Standard is this one. You can have this one multiply by 16% so that you get VAT element. So times 16%. 16% is exempt, not tax exempt. So that one will be 0. The VAT will be 0. Go to the exempt purchases, the exempt sale for purchases and exempt will remain in the inventory at the end of. So that one is part of the inventory. We are not, it will not affect the VAT. Now, during the month, monetization paid the rent of this one for the month of discharge at the 80,000 per annum. Up and not all the transactions are reported at the standard rate of 16% unless stated otherwise. So, which means they are of the net, these are the net value, they are not inclusive because we have been told are reported at the rate of that one unless otherwise. So that rent, so we have been told all the transactions. So you'll have the rent here, rent is the part of the purchases. It is 800,000, 80,000. Yeah, 80,000. So 16% of 80,000. 16% of 80,000. Get that? Go to the credit loss. The business reported credit losses of that one. Another expected credit loss. So when you say credit loss, it affect our sales here. So you reduce our sales. So we have the credit losses of that value 280. Remember, we have cut 3 zeros. So you have credit loss here of 280. So also this 280, we tax at 16%. That's 16%. Have that. That what is supplier whom they had made a purchases of this one, whom they made a purchases of that one, and the customer the standard rate in January still all this one was. So we have the bad debt here, which would be also the bad debt or bankrupt. So the correct name we can say bad debt. Bad debt of 302.55, 225, 325. We also claim reduce the tax which we had paid for 52,000. But now remember, for bad debt you must be specific. They will only allow if it is the specific. If it is not specific, that they will not allow. Then to go to number 8. At the end of every month, Mwanaisha pay electricity. So there is a prepayment. She paid that one for the month of April, but also she had paid that one. She paid that one for the April. She had paid that pamoja.
Nakulose.
Yes.
Nakulose.
Umesema? Umelost?
No, I was losing you.
Pamoja. So we have been told at the end of every month, we have the prepayment, which she paid this one, 238 for the month of March, which means they claim the VAT that month. So, but now she paid for the April. Yeah. So we'll pay it for this one. Remember, the VAT is the month of payment. So it depends, come your transaction inclusive the VAT, that you will claim the VAT of 4.2 here. So we have the prepaid electricity. Because tax always inakuanga on the cash basis. most of the time nakuanga cash basis. So 4.25, take 16% of that, 16%, it's 6.8. Telephone, we have the telephone and the stationery. So let's copy all this. Cut these. So cut the stationery. Telephone. T element. VAT now, we have been told it is included. This one, it is included the VAT. So we have to calculate the net value. Have to calculate the net value. So let's first calculate 16% of this. But remember zeros. So we have to cut 3 zeros so that you can't have the uniformity. So this one will be 13.22. Then 1100. 11, 1, 1. Then this one will be that 6 because of zeros. So you'll come here. So even this one, this one will have 3 zeros here. So that you can have 80. Yes. So now this one will be 16. This type 16%. Get that? So let's drag it downward. The fixed, sorry. This type 16%. So this time is 16%. But don't the audit fee, you have to adjust the audit fee. So the audit fee, this is amount inclusive the VAT. So we will say we multiply by 100 and then we divide by 116 because it is inclusive the VAT. So 100 plus 16%, which is 116. So for us to get the net value, we'll say equals, we multiply by 100 and then we divide by 116. So that's what will give us the net value of 96. So we round off this one. So this will be the net value. This is the net value. So the it VAT is this one. So if you add the two, you get 111, which is that is the total amount inclusive the VAT. Inclusive the VAT. So let's go to the next one. Next one, tumeambiwa they made a donation to a registered charity consisting in cash and this one in form of goods. So hizi goods, remember ziko amepeana goods in the store, and these goods maybe walikuwa na, we don't know, hii charity ukipeana cash haina VAT. Also ukipeana hizo zingine hazina VAT. So already ulikuwa umeclaim the VAT ukinunua. So purchase hizo form of goods, it is already included in the purchases. So you not claim the VAT there. Closing inventory was valued that one. We don't have a VAT on the closing inventory. We claim it when you are bought. So now you will compare the two. Whichever is high, we are not interested in the net value. So we are interested in the VAT element. So this one is 330, 331, and then the other one is 300. So in this case, we have the VAT refundable because the output, the input is more than the output. So VAT refundable of, so it will be a VAT refundable of this minus that of that. So we have the VAT refundable of 27. So that's what
Uh,
that was 80. Let me have any for tax. Capital allowance. Capital allowance, you have to have the schedule. Have to have the schedule. Because this what, remember for now, the capital allowance has been classified into, we only have two classes as per the current last finance bill. We have a 25% and 10%. We are only, so earlier before we had around four classes, but for wear and tear. And also this capital allowance, remember we have a non-moving machine and others. So this one we will handle it separately. The side. So maybe I can give you some question. You remember the ratios?
Yeah.
Yes.
Yes, yes.
So do this question for ratios. Do this question for ratios, which we have been told the revenue and profit. So the dashboard should include these ratios. Have we done to this question?
No.
No. So do this one, question 21. You go file a PDF nilitumia. Or also you can download from the website. So
Mm.
you've been given the revenue here. So you have the total revenue, the total cost, that you've been told to prepare a dashboard of the financial performance and financial position of an organization over the last 5 years. You have the key metrics here. You'll be using these metrics to prepare the perform to show the financial performance and the financial position. Performance is the profit and loss account here. So, and you have been given the metrics here. Hizi metric tumeambiwa hizi turnover, the net profit margin, the return on investment, the equity, we have the ratios. So you can use this metric to do the prediction for 5 years period. Then after that, you will calculate the ratios. So ratios like we start with the non-current ratios. The other one is for current asset, current liability, or maybe for profitability ratios. You have to compute the profitability ratios, which the profitability ratios utasaj tuko na a lot of profitability ratios, but examiner alikuwa anataka tu exactly two, maybe earning before tax or EBIT. So kuna profitability ratios na kuna debt ratios na kuna investors ratios. Hizi ukisearch utapata tu online profitability ratios. You still remembering how to do the days of purchases? This one, you did this one in financial management. Kama ulisahau.
Oh yeah, nakumbuka.
Yes. Or P and D or R. So when we be asked to do the days of our purchases, you take days of the purchases is 365. You multiply by the average. Creditors, you divide by the what? The total annual cost of sale. Cost of sales, which the examiner has given you all there. Also the days of receivables or sales. You take 365 unless ametuambia we assume how many years. Yes, assume 360 days. So you take 360 days, type the average debtors, you divide by the annual credit sales. And you don't know whether all the revenue years credit sales. So unless they have been told ametuambia. So examiner is silent. Assume that all the revenue are credit sales. So that question is also good. That question is also good. So do part A, part B, part C, part B. That one is receivable level, prepare the dashboard for revenue and profit, which already we have the revenue here. So you have the revenue August. So you can prepare the dashboard, this one, because you an element of revenue, you have the element of a profit margin. Have they given us the profit margin? The profit margin. The profit margin, we will take uh, the gross profit, the same as the profit margin. Gross profit is the same as the profit margin. Payables level, we have the payables, also we have the receivables. And what else? The number of days of sales, POS and POS. Yeah. So you can do this question. It's not difficult. So this one is under the finance. Finance. Remember to define a topic here, financial management. So if I were you, I would have revised all these past paper up to now. Because the examiner will repeat the same questions and also go back still remember to go back to the theory. Fanyanga introductions. So do this. When review on Monday. You can do this. We can review on Monday, maybe from or Tuesday. Anytime to or Wednesday, anytime you feel like you have a time in between the week before next class, and say we review it.
I'll be on leave from next week Tuesday.
Next week Tuesday.
So yeah, I think we can for until 25th.
So during the day you can event, we can review it 1 hour, we review them.
I think we can maybe have revisions.
And maximize that one.
Well, I can't hear you.
Say maybe we can at least in that league we can be having at least one class equal time during the day.
Yes, sir.